It's Thursday, the 1st of July 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Sean Aylmer. The share market finished the financial year up 24%, the best performance in more than 3 decades. That's our main story. Also coming up in today's podcast, new COVID cases and restrictions announced across the country as the fight over returned travellers heats up. The inquiry into Crown Resorts hears about the gambler who didn't leave the casino for 96 hours. And Telstra sells its towers. Then stay listening for my chat to Centennial Asset Management's Matthew Kidman about the last year in equity markets. But first, here's a brief look at the markets. Wall Street was mixed overnight with the Dow Jones Industrial Average up 0.5%, the S&P 500 flat, and Nasdaq down 0.2% in early afternoon trading. It looks like the major indices will again finish higher for the month, and for the half year are up almost 14%. That's the second best start to a year since 1998. European markets were lower. London's FTSE and Stoxx Europe 600 both closed down 0.7%. As it has been all year, investors are weighing up the pickup in COVID-19 cases and chances of higher interest rates against the strong pickup in the global economy. The last day of the financial year was a good one for local investors. The S&P ASX 200 rose 0.2%, to finish the fiscal year at 7,313 points. All in all, it was a quiet final few sessions for the bourse, in sharp contrast to the incredible run over the past year. More of that in a moment. Oil prices were up with a barrel of Brent crude back above $75 US. OPEC leaders are meeting later today. Gold prices were also up, almost 0.5%, but that couldn't stop the precious metal having its worst monthly drop in more than 4 years during June. The Aussie dollar fell back on a stronger greenback and is now trading at below 75 US cents. And Bitcoin finished the month lower, worth around $34,600 US a unit. That's the worst quarterly result for the digital unit since 2018. Investors on the local share market have experienced their strongest financial year returns in more than 30 years. With the bourse up 24%, or about $560 billion, over the past 12 months. It's the best return since the inception of the S&P ASX 200, and the All Ordinaries, which has been around for a lot longer, recorded its best return since the 1987 financial year, up 26.4%. The booming annual return was, in part, because the bourse started at a lower point during the height of the COVID-19 pandemic. But it also reflected the much better than expected economic rebound, which has pushed the unemployment rate lower and the growth rate higher. Among the best performers for the 12 months were the discretionary stocks, such as many of the retailers, the banks and technology stocks. The utility index was far and away the worst performer of the year, down 23%. So, who were the best performers in the 2021 financial year? Coming in at number 1 was Chalice Mining, a company that basically got lucky, finding a shallow nickel, copper, cobalt, palladium gold deposit. Its share price is up 646% over the year. Next is lithium miner Pilbara Minerals, which has a commodity everyone wants. The worst performer was the A2 Milk Company, which had its market decimated when the Daigou channel, expats, mostly Chinese, sending products back home, dried up. Some big names had a very bad year. Low energy prices meant AGL Energy and Origin Energy were among the worst performers. AMP Limited had all sorts of governance issues. All three were in the worst 10 performers of the top 200. Buy Now, Pay Later Group Afterpay was the best among the large caps, while BlueScope Steel and Domino's Pizza also had very good years. On to the mega caps. The banks moved in lockstep, almost. ANZ rose 51% over the year, while Commonwealth Bank, Westpac and National Australia Bank all ended up 44%. The three big miners, Fortescue Metals, BHP and Rio Tinto, also outperformed the market. The retailers, Woolworths and Coles, ended the year about where they started, though they had run hard up until June 2020. Newcrest Mining fell alongside a lower gold price. Woodside Petroleum hasn't been able to pick up, notwithstanding the higher oil price. And Toll Road Group Transurban had a pretty ordinary year as vehicle traffic tumbled. Goodman Group, Wesfarmers and Macquarie Group all outperformed the market, while Telstra underperformed. CSL's share price went backwards. All in all, a volatile, memorable and ultimately successful year for investors. Hope you made a mozza. In a moment, the rest of the news you need to know this morning. In overseas news, the Chinese Communist Party celebrates 100 years today, with gala celebrations in Beijing's Tiananmen Square, fronted by President Xi Jinping. It's now the second largest economy in the world and is expected to grow at an 8% clip this year. Keep that pace up and it will catch the United States in about a decade. A survey by the Financial Times shows that academic economists expect the US Federal Reserve will lift interest rates twice next year as the US economy rebounds quickly. It follows the leader of the Federal Reserve governors last month, who predicted something similar, and it's adding to the upward pressure on the US dollar. North Korea officially has no cases of COVID-19. However, leader Kim Jong-un yesterday said a grave incident from quarantine negligence had created a crisis. Mr. Kim said he had analysed the ignorance, incompetence and irresponsibility of the cadres. It suggests there has been an outbreak. As yet, the dictatorship is yet to receive any COVID vaccines. And TikTok, the short video social media platform, said it had removed 7 million accounts belonging to children under the age of 13. The group, owned by China's ByteDance, has been under fire for the amount of data it collects from its users, particularly children. Locally, there were 22 new community-transmitted cases of COVID-19 in New South Wales, of which half were in isolation. The numbers came as 2 Sydney hospitals went into lockdown and the state government introduced compulsory QR codes for supermarkets, gyms, offices, shops and shopping centres, schools and universities. Alice Springs introduced a 72-hour shutdown after an infected man spent several hours at the airport. South Australia announced 5 new cases, triggering some new restrictions in the state, but not a full lockdown. Queensland recorded 3 cases and Victoria and Western Australia both recorded 1 new case each. Meanwhile, the debate and confusion over the use of AstraZeneca vaccine continued, with Federal Health Minister Greg Hunt saying there'd been no change in medical advice. AstraZeneca is preferred for over 60s and Pfizer for everyone else. But the government on Monday added that anyone could have AstraZeneca. The mixed messages isn't helping the vaccine rollout. So far, 7.64 million doses have been administered, including 145,000 on Tuesday. More generally, some state premiers, notably Queensland Anastasia Palaszczuk, are at odds with Prime Minister Scott Morrison over the rollout, making for a heated national cabinet meeting tomorrow. Queensland officials yesterday warned against younger Australians taking the AstraZeneca vaccine and accused the Prime Minister of putting lives in danger. And the state premiers of Western Australia, Victoria and Queensland are pushing for fewer international travellers entering the country. And yesterday, Australian Border Force figures show that nearly 14,000 Australians and permanent residents entered the country on more than one occasion in the 13 months to April this year. People making multiple entries seems a little unusual given so many expats can't get home. The shocking stories out of the Victorian Royal Commission into Crown Resorts continue to emerge. And yesterday, it was told a former doctor and problem gambler spent 96 hours in the casino without leaving. She played baccarat for 4 days, taking naps around poker machines. Commissioner Ray Finkelstein has previously indicated that how the gaming giant manages problem gamblers will influence his decision on whether Crown was suitable to hold a gambling licence in Victoria. It's just very hard to understand how no one can tell the gambler to go home. Telstra has sold a 49% interest in Telstra Infraco Towers to a consortium of the Future Fund, Commonwealth Superannuation Corporation and Sun Super. The price was $2.8 billion and 50% of that will be returned to Telstra shareholders when the deal is complete. That triggered a 4.4% jump in Telstra's share price yesterday. The towers business is a strategic asset and supports Telstra's mobile network. Analysts said the price paid was at the higher end of expectations. It helps that the buyers were Australian with deep pockets. The corporate regulator has come out against exchange-traded funds linked to cryptocurrencies, such as Bitcoin. ETFs allow investors relatively easy access to an asset class. A consultation paper from the Australian Securities and Investments Commission, released yesterday, said there was a real risk of harm to consumers and markets, but allowing them on the ASX was possible, as long as they were developed, operated and regulated carefully. Sounds to me like ASIC was saying we don't really like crypto-linked ETFs, but realise we can't really stop them. Staying with ASIC, it's accused former Newey Chief Financial Officer Stephen Doyle of making $17.8 million from insider trading. It also claims he helped release a prospectus for the tech company's December IPO that was false and misleading. According to media reports, Mr. Doyle, his brother and father, are at the centre of 2 investigations into the group's share price. Newey listed in December at $5.31, peaked in January at $11.86, and is currently trading at $2.20, down more than 14% yesterday. The court has heard allegations that Mr. Doyle's brother, Ross, sold 2 million Newey shares shortly before the company downgraded its half-year forecast. AGL Energy's board has approved the split of the company later in the year. The new group, Accel Energy, will house base-load power-producing assets, i.e. coal-fired powered stations, and the redevelopment of its sites to low-carbon industrial energy hubs. Accel will retain a 15 to 20% stake in AGL Australia, which will house the retail assets. Interim CEO Graham Hunt will take on the Accel CEO job. Not easy in an increasingly green world. AGL share price fell 10% yesterday. It is the end of the financial year and there will be a raft of superannuation and tax changes starting today. The big one is that the superannuation guarantee will increase from 9.5% to 10%, meaning everyone will put more into their retirement savings accounts. There's also an end-of-year rebate for singles and couples earning up to $90,000 and an extension of the low and middle income tax offset. Rio Tinto declared force majeure on customer contracts at its Richards Bay Minerals subsidiary in South Africa after an escalation of security concerns at the facility. The company has ceased operations until the safety and security position improve, having endured violent attacks on workers and plant and equipment. The company has 5,000 workers at Richards Bay, and there are fears that the closure could trigger reprisal violence against other Rio assets. Australia Post will continue to offer banking services to Commonwealth Bank and National Australia Bank customers for the next decade after signing a new deal. Westpac has extended for another year while negotiations continue, while ANZ has no arrangement with Aussie Post. NAB said 260,000 customers banked through Aussie Post, while the number of Commonwealth Bank customers was about 875,000. The outlets helped the bank solve the problem of running expensive branch networks. And finally, the number of vehicles in Australia has passed 20 million for the first time. Of that figure, just 23,000 were electric vehicles, according to the Bureau of Statistics. Toyota had a 15% share of the market, ahead of Holden, Mazda, Hyundai and Ford. Stick around because up next is our daily interview, and one of our favourite guests is back. Matthew Kidman, Principal at Centennial Asset Management, joins me today for a look back at the year in equities, the good, the bad and the ugly on the share market. We also look ahead to the new financial year and where we might be able to find opportunities. It's a great one for investors. Up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. It's Thursday, the 1st of July 2021. I'm Sean Aylmer and that was Fear and Greed. Enjoy your day.